All right, so good evening once more. This is the 18th of July 2019, 8:30 p.m. Indian Standard Time, and we start our mentorship live session. Thanks everyone for joining in. Let's talk about the index, how it has been behaving over the last 1 week, and what can we expect going forward. Nifty, Bank Nifty, and few sectors. And after that, as always, one by one, each and every doubt and question of yours pertaining to the mentorship trading strategies. So this is the daily chart of Nifty in front of you. As always, you'll know on my left, I use the trend and volatility indicators. On my right, I'm looking at the set of short-term momentum indicators to time my entries and exits. What Nifty did today is slightly indicative of the fact that the downtrend can continue further, that the prices can actually slip down. So what we are looking at is a big sharp sell-off from the highs of 12K down to the lows that we recently saw below the psychological 11,500. This has turned the trend down. Of course, the momentum in TF+1 is also on the downside. So we are in a downtrending market scenario. Swing traders should look for swing short trades opportunities, which has been confirmed today. We have an aim and shoot short trigger on the Nifty. This was our DB, which we call the divergence bar. The point is there is no divergence of the negative hidden nature at this point. So it's not an aim and shoot pure as we always wish to have it with a divergence. But if you go by the indicators, then we definitely have a downtrending market, indicators going overbought and then slipping further down. Overall, it seems like that this market is stuck between two gaps. On the downside, we have this big wide rising gap, which we saw on the exit poll day. And on the upside, we have a falling gap close to that 11,800 mark. So that's your intermediate resistance and support, as we can clearly see. Considering the fact that the index slipped quite sharply in today's trade, which you can clearly see by the intraday charts, this is the 15-minute charts over here. We can see that the last few minutes were quite sharp sell-off that we noticed. And considering that the close was also not far away from the day's low, we can expect that this index is poised, is all well placed to fall further down and may be testing the lows of 11,500 soon. Bank Nifty, if you look at the chart of Bank Nifty, we see that the index has not yet tested its gap up, which is within that psychological 30K mark. It's back to its supports, it's back to its lows that it saw 2-3 days back. So it's weaker than the Nifty on a very short-term time frame. And looking at the indicators, it seems like we have a aim and shoot, not exactly an aim and shoot, but these indicators really did manage to go as close as to the overbought territory. It looks like this market is likely to slip further down. We had a hook set up here on this bar, which was on the 15th of July, and this hook gets negated below 30,323. It did not have enough strength to take it up, and after today's move, it seems like this hook is likely to get negated. And in the meantime, it has made yet another hook, which we see in today's bar. So if this hook has to work, then this hook has to get triggered, which means that the index needs to go above 30,745 or 3750, that is close to today's high, and only then will you have any opportunity of 3100 or further up. If that's not going to happen anytime soon, let's within the 1 or 2 days, then high chance this hook will get negated, and then the index is likely to slip further down and test this gap on the downside. I'll take the opportunity to just quickly reiterate the fact that hooks are not strategies of reversals, but pause of the current trend. So Bank Nifty, Nifty both are in a downtrend. and the momentum is slipping down. We had emergence of fresh selling in today's trade, and it seems like, looking at the close, it seems like if the index does not bounce back and take away today's high, then it is all placed for further downside. What about the sectors? Let's quickly open the report designer and drop a rate of change over the last 5 days, or let's say 4 days, Monday to Thursday. And let's look at the NSE sectoral indices. And when we run a query, we quickly find that PSU banks continue to feel the pinch, 3% down over the last 4 days. So it's essentially the PAC stocks, the PAC index, the government companies which are facing the heat. Auto continues to weaken, and it is in a severe downtrend. This is the weekly and the monthly chart of the Nifty auto index. It's fairly beaten down, deeply oversold, signs of a very strong downtrend. The mid caps are also there, which took the beating in over the last 4 days of trade in the market. IT, thanks to Infosys, gap up and sustaining on the upside, thanks to Wipro's bounce back in today's trade. IT is the biggest gainer, the Nifty service. We have some support coming in from FMCG, financial services supported by HDFC. Pharma is trying to play its role a little bit here and there, but pharma is still in a downtrend. But you can see over here, my TF+1 momentum is improving. And the last time this happened, is a daily chart, was early May. So from May, June, and we've passed the mid-July. So 2.5 months, the index was in a downtrending phase, and now it has shifted up and it's gone to an uptrending phase on my TF+1. Also, we have a decent intermediate high. So for the pharma sector, the important thing to note would be the 2-day correction that we see here. Will it have enough strength to consolidate and bounce back? If not, then we are looking at an index which will probably go again range bound. So overall, it seems like it is the public sector stocks across all the different segments, be it banks or infrastructure, etc., are taking the beating from the market. Small and mid caps continue to weaken. IT is trying to support, but very restricted to just a couple of stocks. And FMCG, but not much weightage that we can find here. So overall, does not give us a lot of hope or comfort in terms of going heavily long or basing majority of the trades in the long category. On the other hand, both, in fact, Nifty has given us almost a swing setup. And if this works, then we are looking at a level close to that 11,500. It's testing the gap. The Bank Nifty is yet to test this gap. It's better to go short and stay short in the market. Long trades should be kept as short term as nature in intraday, or just you take it today and exit tomorrow's opening, until and unless we get some definite signs. I think the definite sign is today's high for both the Nifty and the Bank Nifty, especially for the Bank Nifty. 11,700 for the Nifty, as I discussed some time back. This is the two gaps, the game of two gaps for both Nifty and for the Nifty future chart, both on the downside as well as on the upside. So I would say bearish is the stance. Hold on to your shorts. Positional trades should be shorts. Quick intraday trades or T+1 trades should be on the long side. All right, so that's our take on the markets as always. Now let's open the floor and please ask all your doubts pertaining to our mentorship trading strategies. Thank you.